Hello everyone, this is Veru from Palisade Capital Management with a quick market update on Tuesday, April 8th. Tariffs remain the key issue for the economy and for stocks. Earlier today, Treasury Secretary Scott Bessent gave some clarity on discussions with countries willing to look at ways to meet the administration's demands on trade. Japan, the third largest economy in the world, seems willing to discuss ways to improve trade relationships with the U.S., certainly a very good sign. After rising sharply on this news this morning, all the stock market gains were erased as no progress has been made with the biggest economy in the world, China. The U.S. is set to add additional tariffs at midnight tonight, raising them to over 100%. The two questions I get most from clients are, when will the stock market bottom, and is the U.S. going into a recession? On recession, many economists have raised their expectations of recession as a result of the tariffs, and some have made it a certainty. Economists do not have a good track record predicting recessions. As the joke goes, economists were put on the planet to make astrologers look good and have predicted 13 of the last 3 recessions. It's very hard to predict the economic outcome from these events because the news is so fluid. As I've said previously, much of the negative impact can be immunized with tax policy, which is being actively debated in Congress. If a tax bill is passed in May, the risk of recession goes down dramatically. We know that the market's weakness can be stressful, and we're doing everything we can to be sure we own companies that can weather any economic storm and possibly prosper in an uncertain environment. While it's tempting to just sell everything, it can often complicate long-term financial plans to meet client goals. I'm sure many of you have heard that timing the market is ill-advised, but I'd like to explain why with some statistics. Over the last 20 years, the S&P 500 rose at an annual rate of 9.8%, but if you miss the 10 best trading days, it cuts that return to 5.6%. Looking at 40 years of return, missing those 10 best days cuts the annual return by half. Oftentimes when stocks drop sharply, there's usually a sharp bounce back, but you never know when. While we can't know with certainty when stocks will bottom, a lot of damage has been done to the market, and we are likely very close. A lot of stocks are already pricing in a significant slowdown in the economy. During times of uncertainty, I oftentimes watch interviews with the great investors of financial history. Peter Lynch, the great Fidelity mutual fund manager, has said, in uncertain times, you want to listen to your brain and ignore your stomach. Good advice as we navigate through the market volatility today. Thank you for listening, and we're here to speak with you at any time.